Welcome back to Growth Without Referrals. Today, I'm joined by Jeff Bray from Harbor Light Advisory. Jeff has spent years working across banking, advisory, growth strategy, and technology transformation, helping financial institutions navigate everything from operational growth to M&A to emerging technologies like AI. What I found especially interesting is Jeff sits at the intersection of traditional relationship-driven banking and the modernization happening right inside the industry right now. Jeff, we're really glad to have you here.
Thank you, sir. It was a pleasure. Looking forward to the conversation.
Excellent. So, Jeff, I'd like to start with your journey because banking is one of those industries where people rarely take the straight path into it. How did you originally get into banking and advisory space?
I think it's probably when I started my professional career, I was about as far away from banking as anybody could be, right? I graduated from the United States Military Academy and put on the uniform to go serve our nation for a variety of years. And then as fate had it, ended up leaving that service after about 10 years and fell into short cycle manufacturing company called GE Appliances. And that was still at the time when Jack Welch was running the company, and Six Sigma was, the execution discipline that was being run through all the GE. And so I got my green belt, black belt, master black belt. And then obviously with the success that GE was having, we ended up being recruited away into financial services. So I started at Capital One first, helped bring Six Sigma to Capital One. And then a few short years later, the network had reached back out, and I had a good friend of mine that needed some help in Bank of America. And that's essentially what started my banking career. And I'd spent a lot of time in the operational side of the business, process excellence, working on improving how, financial institutions could be a lot more efficient. And then, me joining Bank of America, it got turned into, brought into the M&A juggernaut that B of A was, from 2000 to 2010. And then from there, just grew my career where I spent half my time in operations, half my time in technology. And, as I've, worked in different size banks, worked for non-bank financial companies, at a point shortly after COVID, decided to walk away and, get in, felt like there wasn't good enough talent or leadership coming down into the community banking space. So purposely made a decision to say, I think I could help community banks with some of the challenges that they're going to be faced, over the foreseeable future, especially with the onset of artificial intelligence.
Absolutely. And Jeff, first of all, I want to say thank you for your service.
Thank you. It was a pleasure. It was an honor, and I would do it all over again.
Excellent.
I cherish that time immensely for the opportunity to serve this nation and to lead young men and women of our nation in defense of our nation. So thank you.
Outstanding. And Jeff, you've seen banking from multiple angles. Advisory, technology, operational growth, which gives you a pretty unique lens. One of the reasons I wanted to have this conversation is because banking has historically been one of the most relationship-driven industries there is. And when you look at how banks traditionally grow, how much of it still depends on relationships and referrals?
I mean, it's successful bankers. It's all about, the relationship is the key thread. I don't think that's really changed. Obviously, there's been a lot of disruption in how that thread might be delivered today with the advent of, CRM, with large platforms, disrupting, how consumers buy and engage in typical financial practices, how those referrals might be provided to. The channel optionality has greatly increased, across the banking over the last 30 years, in my opinion. And So I still think it's the base foundation. It's just changed. The thread has changed in terms of, delivery and how those referrals or those opportunities might be presented to the bank or financial institution at any one time. Obviously, the curation of the .NET and what's happened with online banking, then what's happened with the mobile devices have all curated a different way of how relationships are perceived, but also curated a way on how relationships could be acquired.
Okay. And in your opinion, do you think some institutions underestimate the importance of modern growth systems?
I do, and I think we're going to see shortly, the age of data, right? That we're stepping into with artificial intelligence. I think financial institutions have to have a purposeful strategy on how to acquire, curate, and monetize that information that they have running through their institution at any one time. And examples I always lay out the feet of anybody I can talk to that sits in a C-suite or on the board is if you want more ownership or relationship, use the data to create the opportunities to create those relationships. And a great example, in my opinion, is, banks today, right? You have a primary checking account. Today I work for ABC Liquors and tomorrow I work for XYZ Tires, right? What's changed? My direct deposit. So the bank knows I made a job change, right? How many banks, for you personally, and for me personally, have ever reached out because they have that data and said, "Hey, Mr. Bray, we see that you changed jobs. How can we help you?" A whole different way of using data to curate, how you might be able to curate a stronger relationship or a more valuable point of intersection of creating a relationship. I just don't think the financial institutions have done as good of a job based on the data that they sit. And I think with the advent of this data age that we're on the precipice of, is going to put more pressure on institutions to have a very thought out plan around how they can curate that information and create value both indirectly and directly through a relationship model.
And Jeff, that's a great use case that you just described about how the financial institution could use that data, leverage that data to increase that relationship. And you mentioned during our pre-call that you were attending the FIS conference and that AI was a huge focus this year. What are you seeing right now in the banking with AI that feels real versus hype?
Well, I think most organizations are still trying to get their mental capacity around the variety of use cases and where that's going to create value and where that's not going to create value. But let's just go back to the use case you just said, right? So let's say you had an agent or a bot that was looking for those opportunities and curating that information. And let's say it's delivered to the banker, or maybe it's delivered to a wealth advisor, right? Or maybe it's delivered to the commercial banker in a way that is highly consumable and gives them an excuse to have a conversation, with their client. But what I'm seeing at this standpoint is still a lot of what I call early stage test and learns around where the curation is going to happen and the creation of value is going to happen. And obviously a lot of money is coming to the marketplace to try and develop, these solutions, these opportunities, and to service those appropriately. And obviously the spirit point, when you think about FIS and Fiserv and, Jack Henry, to name a few, they have a vested interest, right? Because they sit on a lot of data. They manage a lot of the bank's data on their behalf. So I think there's a strong effort and realization that they've got those firms, technology service providers, have to provide a better service and better tool sets for banks to compete in today's market. On the flip side, for management teams, operational leaders, technology leaders, I think they have to get really smart around how they want to leverage those type of solutions that are going to create value for short term, midterm, long term, and where you see things getting rooted are areas where there's just a large data set. So think about cybersecurity alerts. Think about areas where you have substantial amount of information coming in at one point in time, and that creates a rich environment to be able to train bots that can help shift through that and create value in terms of absorbing, analyzing, and disseminating out the appropriate information to be consumed by humans. Outside of that, I think you're going to see a lot of software solutions come into the space to be disruptive or create co-opetition with the FIS Fiservs that, again, can create value and give financial institutions the opportunity to test their way into how to leverage those features, functions efficiently for their firms. So I will tell you this. I was at the same conference a year ago, and the conversation that we had a year ago, the conversation has totally changed, right? So you could see the education level, you could see the energy and knowledge base change dramatically in a year.
Okay. So Jeff, in banking, Do you think AI changes customer experience more or internal operations more or both?
I believe it's going to change both. And the reason why is you're going to have, those. So let's just take the digital side first. You have you have platforms and a variety of platforms that will naturally gravitate to those solution sets for speed of execution, for dissemination, for, improving the speed of response, the service response. So I feel like that, you're going to see that. And by nature, a lot of people probably don't know, but you think about any application that's coming out today is probably have some sort of either AI solution or AI innately built in it today. And so that's going to show up on your mobile phone. It's going to show up on your desktop. And I think, you're just going to see a cultivation of trying to service better, quicker, faster through the digital medium. I think for banks internally, right, when you think about, how do banks get measured? A lot of financial institutions get measured on efficiency ratio and wanting to do more with less. And so I think the adoption there operationally makes a lot of sense because you're going to want to leverage, potential solution sets in a way that allows you to either scale efficiently or service a lot more efficiently than you do today.
Okay. So there's something I'd like to unpack more, especially for our audience. When you mentioned this conference ecosystem around FIS, Jack Henry, banking technology, for people outside the industry, what role do those conferences actually play in banking growth and innovation?
They're definitely a critical cog in the ecosystem, mainly because of what services they sell and provide to those financial institutions. I think they're, again, they represent, part of the ecosystem, not the totality of the ecosystem. And I think that's, what financial institutions have to really look at is, who their partnerships are and how are those partnerships enabling them to succeed in today's business. When you think about the pace of change, when you think about, how fast change is happening, specifically in the technology medium, you really have to make a strong strategic assessment. Are you with the right partners or not? And, I think, one of the strategic challenges I see roots itself all the way back to 2008, right? When you think about the crash of, the financial issue that we had with mortgages and the broader financial markets, that it started in 2007 and rolled in 2008, 2009. iPhone came out in 2008, 2007, 2008, right? So financial institutions by and large, I think, missed the opportunity because they were fighting to stay alive with the working through the bad assets on their balance sheet, right? So they spent a tremendous amount of time and focus and effort trying to stabilize, their bank versus innovating, right? And when you think about the innovations that happen over that time period, as the world in other industry markets, retail, logistics, consumer products, you saw a significant shift, right, in terms of buying patterns, how things were being presented, how things were being marketed. And you saw larger platforms step up and take a bigger ownership in owning the point of sale. Think about Amazon, think about Walmart and their digital journeys. And I think that put a lot of pressure on banks because they didn't have the capital or the time or the effort to spend in that critical period because they were working through the challenges on the balance sheet with the bad assets and what fell out through the mortgage challenge that was enabled in 2007. So I think the banks, financial industry by and large, and I'm not talking about the JP Morgans or B of A's, because I think those tier one banks have the budget, have the ability to compete in the marketplace more purposely. But as you get down to the regionals and the community banks, that piece was I think a big step backwards, which I think we're still trying to play catch up today, right? And when you think about the profitability of those financial institutions during that time, you think of all the bank failures during that time, that had a legacy impact. That's taken a while for the financial institutions to shake off, in my opinion.
Okay. Jeff, you also mentioned you worked on enough M&A and growth initiatives to see patterns. When organizations are trying to grow, whether through acquisitions, expansion, or transformation, where do they usually struggle?
That's probably a whole different podcast, Mark. So I think by and large, if you look at the M&A marketplace and you kind of take a look at what's happened over the last 20 years, you obviously have seen a downward trend of the number of banks and credit unions in the marketplace. I think part of that is, driven to try to drive efficiencies of scale more purposefully. But I think thematically, I look at it this way. It's, to run a bank is people, process, system, and tools, right? And when you look at the M&A marketplace, people is really rooted in culture, right? Can you find two firms that have a similar type culture, that have an ability to combine in a way efficiently and effectively through that cultural meld? I think is number one. Number two, processes, bank processes, but a lot of it is rooted in the product and services that are being delivered, right? Not all banks sell every single product, out in the marketplace. And so, is there a way to expand your revenue play there? Is there efficiency because you get more scale, which gives you better opportunities in the marketplace, better opportunities with the, potential partners downstream, that are interested in partnering with you when you think about, selling loans, into the private capital markets, and then systems and tools. I mean, that's probably one area that, my experience is the least understood and the least and the most problematic, or can be most problematic in the M&A, which is, you've had over the last 20 years, you've seen contract lengths get really extended with the core providers. You've got a lot more applications out there than you had 20 years ago. So the complexities there. Data is probably more critical today than ever, right? And how good is the data sets, of both banks. And so there is, I think, a lot more risk sitting in the technology space because of those factors that, could make or break an M&A deal, quite honestly, in terms of what the bank experience, the combined bank experience post conversion.
Okay. And Jeff, when you look ahead over the next 3 to 5 years, what do you think banking leaders need to be paying attention to right now?
That's a good question too. I think collectively, my viewpoint is customer expectations are being set up or set outside of our industry, right? We've had enough disruption in platform players coming in and really setting expectations a lot differently, along with the fintechs. And I think that's a real gap. But I think it's also a gap that can be closed or at least minimized, because when you think of a bank, traditionally, you think of trust, you think of security, you think of, balance sheet structure, right? You think about regulatory standards that a lot of those other platform players don't do, and definitely no tech company does. So I think, you have to be cognizant that you're not setting the standard, but you bring some critical characteristics and foundation that allows you to compete because of those pillars we talked about earlier, in my opinion. I think that's one. Relationship's not going to go away, but it's going to change. How that relationship is curated and maintained and managed is going to change. Technology is going to be a big driver of that. And we talked about that through this podcast around, what that, where those disruptions could ultimately come from, and how AI can be a facilitator in allowing you to compete in that future marketplace. I think at the end of the day, it comes down to service, and it comes down to helping families and companies, small businesses, large businesses, deal with the ebbs and flows of the marketplace and being there for them and investing back in those communities. And I don't think you can really replace that. I think that what makes this nation great, in my opinion. But my advice, to anybody watching this, especially if you're in decision-making spaces, I think it comes down to this. I think in this age of data, you're probably going to be forced down two roads. You got to find a specialty that you can just service very, very, very well and compete in that space from a specialty perspective, or you got to scale, right? The mechanics, to me, on the balance sheet, the mechanics of the bank, the scaling piece, and how, a big part of your expense dollars are based is around how you service that scalability efficiently and effectively. That's why I think you see a lot of banks go down the M&A route and have scaled. And there have been some very successful banks that have scaled from 2 billion up to 30 billion. I think that is a great playbook, in my opinion. And on the flip side, because of the age of data and the ability of automation and artificial intelligence to supplement how you curate that data, you have the ability to specialize and compete in specialties that allow you to make a good foundation and banking foundation to support those, those businesses or those specialties that you want to support. And I think that will become more prevalent simply because I think, you'll see the curation of data driving that.
Okay. Do you think community and regional banks can compete effectively going forward?
I do, with one caveat, which comes back to back to that strategic direction, right? Which is either you got to scale or you got to specialize and be comfortable in the areas that you're specializing in and create a business based on people, processes, and tools that can be very competitive in those specialties. Yeah, and I think that's one of the reasons why some of the fintechs have been somewhat successful is they've found a problem, they've solved it, they made a better mousetrap, and as such have gotten a beachhead or a foothold and been able to curate some value there. But again, I think when you think about the relationship, we talked about relationship banking early on, and I think ultimately coming down to, at least for your remaining lifetime, decisions that happen in this space, especially on the business side and on the personal side, are some of the biggest decisions those firms or people make in their lifetimes. And sometimes you need advice, and that starts with a relationship. And I don't think that goes away. I think by nature of us humans, we want an emotional connection. We want a connection in our communities, and banks have created a foundation for that. It's up to them and the leaders to keep curating that, and it's just going to be different because of the types of technologies that can be deployed today.
Okay, Jeff, this is a really insightful conversation. And I appreciate the perspective because you're seeing banking from multiple angles at once: advisory, technology, growth, and operations. For listeners who want to connect with you or learn more about Harbor Light Advisory, what's the best way for them to reach you?
I think 3 ways, right? I think number one, you can go to harborlightadvisory.com, and we've got an intake form. We're all on LinkedIn, so you can find us on LinkedIn. I have to be the point person, so find me on LinkedIn. That's another great way. I think the other way, if they want to use email, it's pretty easy. It's jeff.bray@harborlightadvisory.com.
Okay. And for our listeners, I will be putting Jeff's contact information in the description of this podcast below. Jeff, thanks again for being here. I've really enjoyed the conversation.
Yeah, thank you, Mark. Appreciate the time with you.